All right, welcome back to the deep dive. Today we're going to be looking at Vale S.A.'s Q3 2024 earnings call.
We're going deep into the world of mining.
Exactly.
With the Brazilian mining giant.
Yeah, you know, Vale, they're behind a lot more than you might realize.
Vale is a global player in metals and mining.
They're even a major logistics operator.
Did you know they are the world's biggest producer of iron ore?
Iron ore, wow.
Yeah, AND nickel.
Those are used in everything, right?
Everything. You think about it, from bridges to batteries.
I had no idea.
It's pretty incredible what they do.
So how are they doing? That's what we want to figure out today, right?
Absolutely. We are going to unpack this earnings call transcript
And some of the stock market data.
to see if we can find some clues about their future plans.
Because they have a brand new CEO, so that's really interesting.
Yeah, Gustavo Pimenta.
Taking over from Eduardo Bartolomeo.
Pimenta actually, right at the beginning, acknowledges Bartolomeo's contributions over the last 5 years.
You know, particularly in strengthening Vale's safety.
Yeah, and their stability. You know, the company has gone through some tough times in the past.
So yeah, but now it's Pimenta's time to shine.
And he has. He's laid out a vision for Vale 2030.
Built on 3 key pillars.
So let's dive into those.
This guy is all about building a performance-driven culture.
He wants to streamline operations, improve efficiency,
Ultimately, slash costs.
and really become the most competitive player
Yeah,
in the global mining arena.
that is ambitious.
It's a smart move.
In an industry like mining that's so volatile.
Yeah, staying ahead of the cost curve is absolutely crucial.
He's not messing around. He's talking about like a fundamental shift in their mindset.
Setting the bar high.
It doesn't stop there.
The second pillar of his vision
Superior portfolio.
is all about growing strategically,
But quality over quantity. I like that.
increasing production of high-grade iron ore that commands a premium price,
It's smart.
and expanding the base metals business, especially copper.
I feel like we're hearing copper a lot these days.
It's a crucial metal as we transition to cleaner energy sources.
So they're anticipating the future. That's good.
It seems like they are trying to become the go-to supplier for all these important materials.
And then the final pillar of his vision, this one really stood out to me.
Trusted partner. What do you think about that?
I love that he's talking about responsibility.
It's a clear commitment to social responsibility.
Collaboration with stakeholders.
It seems like they really want to balance their growth with environmental sustainability.
And of a positive social impact.
Yeah, this focus on trust is especially important given Vale's past.
Right.
They have had issues with dam safety and some environmental incidents.
Yeah, they've had a rough time.
But it seems like they're taking it seriously.
They've learned from the past and they're trying to rebuild trust,
Absolutely.
both with communities and global investors.
Yeah, it's a long road, but it seems like they're on the right path. Speaking of dam safety, Vale highlighted their efforts to get rid of those upstream dams in Brazil.
Yeah, those are the ones that pose a higher risk, right?
Exactly, and they're ahead of schedule on their decommissioning program.
Wow, they've already eliminated 16 structures.
They're taking action, not just talking about it.
That's good to hear.
This proactive approach is likely a result of that devastating Brumadinho dam collapse in 2019.
Yeah, that was a tragedy.
It really shook the company.
And the industry as a whole.
Absolutely, and it seems like Vale is doing everything they can to prevent that from happening again.
It's a reminder of the immense responsibility that comes with operating in the mining sector.
For sure.
It's good to see them not just decommissioning those old dams, but also trying to find new, innovative ways to reduce their impact.
Yeah, they talked about the gelato plant.
Oh yeah, what's that about?
It's going to produce high-quality iron ore, but by reprocessing existing tailing.
Wait, what are tailings?
It's basically the leftover waste material from mining.
So they're turning trash into treasure.
Exactly. It's a win-win for the environment and for their bottom line.
That's awesome. Let's talk about their iron ore performance this quarter.
They actually hit their highest production levels since 2018.
Really?
Yep. And it's partly thanks to an increase in pellet production.
Pellets.
Yeah, it's a higher quality product.
Okay.
They burn cleaner and more efficiently in steel mills.
Feel more sustainable.
And they command a higher price.
That makes sense. It's like the premium version of iron ore.
Exactly.
So they're being smart and tapping into that market.
And they're not stopping there. They want to increase production to 350 million tons of iron ore.
Wow, that's a lot.
And they're aiming for 80–90% of it to be those high-quality products.
So they're really going all in on this strategy.
It seems like they're not just chasing volume, they're focusing on maximizing value.
And now let's talk about base metals, because that's another area where they see a lot of potential, right?
Yeah, especially for copper.
Copper, the metal of the future.
That's right. It's essential for the energy transition.
Everything from solar panels to electric vehicles.
As the world goes green, demand for copper is just going to skyrocket.
And Vale wants to be ready.
They've created a dedicated base metals division.
Really?
Yeah, led by a new CEO, Sean Usmar.
So they're serious about this.
It's a clear signal that they see base metals as a key part of their future growth.
Speaking of growth, how are they doing financially? Did they release any numbers?
They did. They reported a pro forma EBITDA of $3.7 billion this quarter.
That sounds pretty good.
It is, especially considering iron ore prices were lower.
So what's driving that performance?
Higher sales volumes helped,
Makes sense.
better cost performance,
Oh, good.
and a favorable exchange rate.
So a bit of luck there.
You could say that.
But they're also becoming more efficient, right?
Yeah, their C1 cash costs for iron ore actually went down year over year.
For the first time since Q1 2021.
That's a big deal. Remember, Pimenta made cost efficiency a top priority.
And it looks like it's paying off.
It's a good sign that they're on track to achieve their goals.
But we can't talk about Vale without addressing the elephant in the room.
The Samarco dam collapse.
That was a tragic event.
Still casting a shadow over the company.
But there is some good news.
They recently signed a binding agreement for the full reparation of the Samarco dam disaster.
That's huge.
It's valued at BRL 170 billion.
Wow.
To be paid out over 20 years.
That's a massive commitment.
But it brings much-needed closure to a long legal battle.
And it shows they're taking responsibility.
It's a crucial step towards rebuilding trust and moving forward. Yeah, it's a long road, but at least they're moving in the right direction, and it seems like they're taking responsibility, you know?
Yeah, and really trying to make things right, so.
Now, we haven't even touched on the Q&A portion of this earnings call yet.
Oh, yeah, the Q&A where the analysts get to grill them.
Exactly. It's always interesting to see what kind of questions they come up with.
Trying to get those little extra nuggets of information.
The first question came from Rodolfo with JP Morgan. He was really interested in Pimenta's short-term priorities.
Yeah, it makes sense. New CEO, everyone wants to know what he's going to do first.
Pimenta actually kind of doubled down on those 3 pillars of his vision, but with a focus on immediate action.
So not just long-term aspirations, but things he's actually going to do right away.
Right. He really emphasized that push to reach that 350 million ton iron ore production capacity.
Saying it's crucial for their market flexibility.
But what really stood out to me was his focus on driving that performance-oriented culture.
Getting everyone on board.
Yeah. He even set a specific goal of pushing their C1 cost below $20 per ton of iron ore.
So for our listeners who might not be familiar with mining jargon, what exactly is C1 cost?
It's basically the direct cost of producing a ton of iron ore.
Okay.
Like all the mining costs, processing, transportation, all of that.
So the lower the C1 cost, the more efficient they are.
Exactly. And they can sell their iron ore at a more competitive price.
Smart, like streamlining the whole process.
Pimenta also stressed the importance of resolving those outstanding legal issues.
Still dealing with the fallout from Samarco, it's a long process.
And of course, nurturing those stakeholder relationships.
Yeah, it's not just about profits anymore. They have to be seen as a responsible company.
Especially after Brumadinho, regaining that trust takes time and effort.
Absolutely. Another analyst, Daniel from Itaú BBA, brought up the ongoing legal stuff related to Samarco, but this time in the UK and the Netherlands.
Yeah, those cases are still out there and could end up costing Vale a lot of money.
And he also wanted an update on the discussions with the Brazilian government about renewing Vale's railway concessions.
Crucial for getting their iron ore from the mines to the ports.
That's a big one, so what did Pimenta say?
He seemed pretty confident that the recent Brazilian settlement for Samarco would actually help them in the UK case.
Okay, how so?
He said it shows they're committed to resolving these issues.
And that it undermines the argument that it can't be done in Brazil.
Right, so that's positive.
As for those railway concessions, he sounded optimistic about reaching a settlement by the end of the year.
That would be huge. It's a major source of uncertainty.
So good news on both fronts, but still a lot of waiting and seeing.
We'll see how it plays out.
Now let's get into the nitty-gritty of costs, because Leonardo from BTG Pactual wanted to know when Vale would actually hit that sub-$20 C1 cost target for iron ore.
Yeah, getting specific.
And he also asked about their energy transition metals business, with copper booming and nickel facing some challenges.
How do they manage such a diverse portfolio in this crazy market?
It's a balancing act for sure.
Pimenta confirmed that they're still on track to hit that sub-$20 C1 cost by 2026.
That's good news.
They're seeing improvements in efficiency, production's ramping up, and they've got those cost-cutting programs.
Attacking the problem from all angles.
That's a good strategy. I like that.
So what about nickel? Because we all know it's important for electric vehicles, but it's a tough market right now.
Pimenta acknowledged the challenges, but he said it's still a critical metal for the energy transition.
It's all about adapting and ensuring profitability.
Luckily, Shun Usmar, the head of base metals, was there to provide some more details.
It's good to hear from the guy in charge.
Usmar emphasized the importance of smart capital allocation, making those strategic investments.
And he really highlighted the significance of Vale's nickel business.
Particularly from a Western perspective, they want to be seen as a reliable source of this crucial metal.
Makes sense. They're trying to position themselves strategically.
He even mentioned the optionality of their nickel portfolio.
I was going to ask, what's optionality?
It basically means their nickel deposits also contain other valuable metals like gold and platinum.
It's like a bonus prize.
It helps them diversify their revenue and hedge against fluctuations in the nickel market.
So they're thinking ahead.
Absolutely.
Then we had Kaio from Bank of America asking the all-important question of cash returns to shareholders.
Everyone wants to know when they're going to see some of that profit.
Especially with their healthy net debt situation, he was wondering if they'd consider an extraordinary dividend.
That would make some investors very happy.
He also asked about partnerships or joint ventures, similar to what they did with Arrow Copper for that Progressive Copper project.
But this time for their iron ore assets in Brazil.
Interesting. So what did Pimenta say?
He was pretty cautious, saying they always carefully consider their free cash flow and their financial obligations before making any decisions about shareholder returns.
It's a responsible approach. They're not just going to throw money around.
As for those iron ore partnerships, he seemed less enthusiastic.
Okay, so they're more open to them in base metals, but not so much in iron ore.
It sounds like they want to maintain control over their core iron ore business.
Which makes sense. They're the biggest player in the market.
Then we had Rafael from Bradesco BBI bringing up the regulatory environment in Brazil.
Yeah, the ever-changing rules and regulations.
Specifically, the potential for a new cave decree.
I have no idea what that is.
It could impact mining in certain ecologically sensitive areas.
Okay, so more restrictions potentially.
Yeah. Pimenta actually seemed optimistic about the discussions, saying they need to modernize those mining regulations in Brazil.
To unlock the country's mineral potential, that's a good point.
It seems like there's a growing consensus that things need to change.
That's positive, but these things take time.
Rafael also wanted to hear from Shun Usmar, the new head of base metals, get his early impressions.
Fresh perspective.
Usmar didn't hold back. He said Vale Base Metals is one of the most underappreciated assets in the battery metal space.
Wow, bold statement.
He's clearly excited about the potential for growth, especially in copper.
And he's bullish on Brazil. They already have a strong presence there.
So it sounds like we can expect some big things from base metals under his leadership.
Okay, I'll be watching that space. Then we have Marina from RBC asking about their growth strategy.
Internal growth versus acquisitions, a classic dilemma.
Focusing on developing their existing assets or buying other companies to expand.
What's the best path forward?
It seems like they're leaning towards organic growth for now.
Makes sense, given their current valuation.
They believe they can create more value for shareholders by focusing on what they already have.
Especially in iron ore and base metals.
But they're not ruling out acquisitions completely.
Only if it makes strategic and financial sense.
So they're being smart, not just chasing growth for the sake of it.
Then we had Timna from Wolf Research bringing up capital expenditures.
CapEx, the money they spend on growth.
She noticed a potential gap between their year-to-date spending and their full-year guidance.
And she also wanted to know how confident they are in a rebound in global steel margins.
Because that obviously impacts the demand for iron ore.
What did they say about that?
Pimenta assured everyone that they're still on track to meet their CapEx guidance.
So those investments are moving forward.
As for steel margins, Rogério Nogueira, their executive director of ferrous minerals, stepped in to answer.
Okay, so the expert on that.
Nogueira actually seemed pretty optimistic about a rebound, saying global crude steel production should be stable with China still leading the way.
China's a huge factor in all of this.
He thinks those government stimulus measures will help stabilize steel consumption.
That's what everyone's hoping for.
He also pointed to some positive short-term data, like those increasing blast furnace utilization rates.
Meaning steel mills are ramping up production.
Which is a good sign for Vale.
If steel demand is strong, they'll need more iron ore.
Exactly. It's all connected.
Christopher from Jefferies brought up Vale's value over volume strategy.
That's where they sometimes reduce production to support prices?
Even if it means selling less iron ore.
He wanted to know if they're going to stick with that as they shift to those higher quality products.
Yeah, if they're producing more of the premium stuff, Will they still be willing to cut back if prices drop?
Pimenta said that value over volume is still a core part of their approach.
Okay, so it's not going away.
But he also said that their increased capacity with those high-quality products gives them more flexibility.
They can be more strategic about it.
Exactly. They can choose to remove those lower quality volumes from the market, if it makes sense.
Using it as a lever to support prices without sacrificing their most profitable production.
It's all about having options.
Makes sense. And finally, we had John from HSBC asking about their overall portfolio. Would they consider adding other commodities to the mix?
Like lithium, fertilizers, or even uranium, diversifying their offerings?
It's a good question. Should they stick to what they know or branch out?
Pimenta said they're happy with their current portfolio, focusing on iron ore, nickel, and copper.
Sticking to their strengths.
But he didn't rule anything out, saying they'll evaluate other opportunities if they can achieve scale and be competitive.
So they're open to new ideas, but they're going to be very selective.
It's a focused strategy. They're doubling down on what they do best.
That makes sense. Wow, that Q&A session was packed with information.
It really was. We learned a lot about Vale's plans and priorities.
It's clear they're at a turning point with this new CEO and his vision for the future.
They're facing challenges, but also embracing opportunities.
They're trying to balance growth with sustainability and responsibility.
It's a complex journey, but it's definitely one worth following.
Well, that brings us to the end of our deep dive into Vale's Q3 2024 earnings call. Thanks for joining us.
We covered a lot today, but this is just a snapshot. The mining world is constantly changing.
So make sure you do your own research, stay informed, and think critically about what it all means.
Until next time, keep exploring and keep diving deep.